Welcome. Today, we're diving deep into one of the most powerful books ever written about financial freedom and inner peace. Unshakeable, Your Financial Freedom Playbook by Tony Robbins. Now, here's a question for you, and I want you to really think about this. What would your life look like if you were completely unshakable? Not just financially, but emotionally, psychologically. What if no market crash, no economic crisis, no bad news could shake your foundation? That's exactly what this book is about. Tony Robbins interviewed more than 50 of the world's greatest financial minds, billionaires, hedge fund managers, Nobel Prize winners, and distilled their wisdom into one simple, actionable playbook. And today, I'm going to walk you through the entire book, the key ideas, the strategies, and the mindset shifts that can literally change your financial life forever. Let's go. Part 1. Wealth, the Rules of the Game. Chapter 1. Unshakable. Freedom is within your reach. Tony opens the book with a bold claim. Financial freedom is available to anyone who makes it a priority. But here's the problem. Most people are terrified of the stock market. They've seen it crash in 2000, in 2008, and they think, it's too risky, it's too complicated, it's only for rich people. And Tony says that fear is exactly what keeps people poor. The wealthy don't avoid the market. They understand it. They have rules, and they play by those rules, while everyone else panics. So the first mindset shift is this. The market is not your enemy. Fear is your enemy. The stock market, over time, always goes up. Always. If you zoom out 50 years, 100 years, the trend is always upward. Yes, there are crashes. Yes, there are corrections, but they are temporary. Tony shares a powerful statistic. Since 1900, the US stock market has had bull markets, periods of growth, far more often than bear markets, periods of decline. In fact, bull markets last on average 9 years. Bear markets, on average, less than 1 year. So the question isn't if the market will recover. The question is, are you still in the game when it does? Key takeaway: get in the market. Stay in the market. Time in the market beats timing the market every single time. Chapter 2. Winter is coming, but when? Here's something the financial industry doesn't want you to know. Corrections are normal. They're predictable. And they're actually opportunities. Tony defines a correction as a market drop of 10% or more. And guess what? They happen, on average, once a year. A bear market is a drop of 20% or more. These happen roughly every 3-5 years. Most people, when the market drops, panic. They sell everything. They lock in their losses. And then they watch the market recover without them. The wealthy do the opposite. When the market drops, they see a sale. They buy more. Warren Buffett said it best. Be fearful when others are greedy, and greedy when others are fearful. Tony gives us a simple but profound insight. You can't predict corrections, but you can prepare for them. How? By having the right asset allocation, by having an emergency fund, by having a long-term perspective that doesn't crumble when CNBC starts screaming about a crash. Key takeaway: corrections and bear markets are not disasters. They are the price of entry for long-term wealth. Embrace them. Chapter 3. Taking advantage of the pullback, turning winter into spring. Now Tony gets tactical. He introduces the concept of dollar-cost averaging, one of the most powerful and underused investment strategies in the world. Here's how it works. Instead of investing a lump sum all at once, you invest a fixed amount regularly, say, every month, whether the market is up or down. When the market is down, your fixed amount buys more shares. When it's up, it buys fewer. Over time, this averages out your cost and dramatically reduces your risk. This is how ordinary people build extraordinary wealth, not by being geniuses, not by picking the right stocks, but by being consistent. Tony also introduces another key principle: asymmetric risk-reward. The best investors don't just look for big gains. They look for situations where the downside is limited but the upside is massive. They protect themselves from catastrophic losses first and then let their gains run. Key takeaway: consistency and protection from downside are more important than chasing returns. Slow and steady really does win the race. Chapter 4. The Core 4. Rig the game so you can't lose. Here, Tony gives us what he calls the Core 4 principles that every unshakable investor follows. 1. Don't lose money. This is Warren Buffett's rule #. And rule #2? Don't forget rule #. Sounds obvious, right? But most investors focus on gains. The wealthy focus on not losing, because a 50% loss requires a 100% gain just to break even. 2. Asymmetric risk-reward. Look for investments where you can risk a little to potentially gain a lot. The best investors find bets where, even if they're wrong, they don't lose much. But when they're right, they win big. 3. Tax efficiency. The government takes a massive cut of your wealth if you're not careful. The wealthy obsess over legal tax minimization. Use tax-advantaged accounts, 401 Ks, IRAs, Roth IRAs. Never pay more tax than you legally have to. 4. Diversification. Don't put all your eggs in one basket. Spread your money across asset classes, stocks, bonds, real estate, international markets. When one goes down, others hold steady. Key takeaway: these 4 principles are not optional. They are the foundation. Build on anything else, and you're building on sand. Part 2. The Playbook: Unshakable Investment Strategies. Chapter 5. Slay the Dragon. Overcoming your worst enemy. Tony now pivots to the psychological side of investing. He argues that your biggest financial enemy is not the market, it's your own brain. Why? Because our brains are wired for survival, not for wealth creation. We feel losses about twice as intensely as we feel equivalent gains. This is called loss aversion, and it causes us to make terrible financial decisions. When the market drops 10%, our brain screams, "Sell, escape, danger." But that's exactly the wrong move. Tony introduces a concept called confirmation bias. We tend to seek out information that confirms what we already believe. If we're scared of the market, we find all the scary news. If we're bullish, we ignore all the warning signs. The solution? Awareness. Simply knowing that these biases exist is the first step to overcoming them. The second step is to have a plan, a written investment strategy that you follow regardless of how you feel in the moment. Feelings are not a financial strategy. Key takeaway: your brain will sabotage your wealth if you let it. Build a system and follow the system, not your emotions. Chapter 6. The Finance Industry's Dirty Little Secret. This chapter is eye-opening. Tony reveals what the financial industry doesn't want you to know. Fees are destroying your wealth. Here's the math. Let's say you invest $100,000 and earn a 7% annual return over 30 years. Without fees, you'd have about $761,000. But if you're paying just 2% in fees, which is common in many mutual funds, your return drops to 5%. After 30 years, you'd have about $432,000. That 2% fee just cost you $329,000. Over a lifetime of investing, fees can eat up literally half your wealth. Tony is furious about this, and he wants you to be too. The solution? Low-cost index funds. Index funds simply track a market index like the S&P 500 and charge almost nothing in fees, often less than 0.1%. Compare that to actively managed funds charging 1–2%. And here's the kicker. Studies consistently show that index funds outperform actively managed funds over the long term. Why? Because even the smartest fund managers can't consistently beat the market, and their fees guarantee you won't either. Key takeaway: switch to low-cost index funds. Even a 1% reduction in fees can add hundreds of thousands of dollars to your retirement. Chapter 7. Invincible. The All-Seasons Strategy. Here, Tony introduces one of the book's crown jewels, the All-Seasons Portfolio. developed by legendary investor Ray Dalio. Ray Dalio is the founder of Bridgewater Associates, the world's largest hedge fund. His insight was simple but profound. There are 4 economic seasons: rising growth, falling growth, rising inflation, falling inflation. Most portfolios do well in 1 or 2 seasons but get destroyed in others. The all seasons portfolio is designed to thrive in all of them. Here's the allocation: 30% stocks for growth in good times, 40% long-term bonds for stability during downturns, 15% intermediate bonds for balance, 7.5% gold as a hedge against inflation, 7.5% commodities. Another inflation hedge. This portfolio, when back-tested over decades, showed remarkable consistency. It had fewer down years, shallower losses, and competitive long-term returns, all with dramatically less volatility. It's not the most glamorous portfolio, but it's designed to protect you from catastrophic loss, which, as we've learned, is the most important thing. Key takeaway: you don't need to be a genius to invest like one. A simple, diversified, balanced portfolio, rebalanced annually, will outperform most professionals over time. Chapter 8: Silencing the Enemy Within. Tony gets deeply personal in this chapter. He shares stories of people who had all the right strategies but still failed financially. Why? Because of their inner game: self-sabotage, fear, procrastination, the belief that they weren't worthy of wealth. Tony makes a powerful point. The quality of your life is in direct proportion to the quality of questions you ask yourself. Most people ask, why is this so hard? Why can't I ever get ahead? What's wrong with me? Unshakable people ask, what can I do today to move closer to financial freedom? What's the opportunity here? How can I grow from this? Your questions direct your focus. Your focus creates your reality. Tony also addresses the concept of scarcity mindset versus abundance mindset. Scarcity mindset says, there's not enough. I'll never have enough. I have to hoard and protect. Abundance mindset says, there are unlimited opportunities. The more I give and grow, the more comes back to me. Wealth flows toward abundance thinkers and away from scarcity thinkers. It's not mystical, it's behavioral. Abundance thinkers invest, take calculated risks, and help others. Scarcity thinkers hoard, avoid risk, and miss opportunities. Key takeaway: fix your inner world before your outer world can change. Your beliefs about money are the most important variable in your financial life. Part 3: The Psychology of Wealth. Chapter 9: Real Wealth. It's not what you think. This is where the book shifts profoundly. Tony asks, what does it mean to be truly wealthy? And he gives a surprising answer. It's not about your net worth. Tony defines true wealth as the sense that you have enough, that you are enough, and that you are living on your own terms. He shares the story of a billionaire friend who, despite having more money than he could ever spend, was miserable, anxious, always wanting more, and a janitor who lived simply, gave generously, and was genuinely joyful every day. Which one was wealthy? Tony argues that there are 4 core needs humans have when it comes to financial psychology. Security, the need to know you're protected. Variety, the need for new experiences, not just routine. Significance, the need to feel that your life matters. Connection, the need for deep relationships. When your financial life serves these needs, you feel wealthy. When it doesn't, no amount of money will ever be enough. Key takeaway: define what wealth means to you, not to your neighbor, not to Instagram, to you. Then build a financial plan that actually delivers that life. Chapter 10: The Wealth of Passion and Purpose. Tony introduces the concept of the 2 masters, the science of achievement and the art of fulfillment. Most people are obsessed with achievement, getting more, doing more, having more. And yet, study after study shows that beyond a certain income level, research suggests around $75,000, $100,000 per year. More money does not increase happiness. What does increase happiness? purpose, growth, contribution. Tony shares that the happiest, most fulfilled people he's met, many of them billionaires, have found a cause larger than themselves. They give, they build, they create meaning. He challenges readers with this question: what are you building your wealth for? If your answer is just to have more money, that's not enough. You need a compelling vision that pulls you forward, especially when times are tough. Key takeaway: true wealth requires a compelling why. Money without purpose is just numbers. Find the reason behind your financial goals, and they'll become unstoppable. Chapter 11: The Billionaire's Playbook: Core Beliefs of the Wealthy. Tony distills wisdom from his 50-plus interviews with the world's greatest investors into a set of core beliefs that the wealthy share. 1. Don't lose. We've covered this. Protection from downside is everything. 2. Risk a little to make a lot. Look for asymmetric opportunities. 3. Expect to be wrong. Every great investor has a plan for when they're wrong. They set stop losses. They diversify. They never bet everything on one idea. 4. Get ready for the crash. They know it's coming. They prepare for it. And when it arrives, they take advantage. 5. Think long-term. Short-term thinking destroys wealth. The wealthy think in decades, not days. 6. Never stop giving. Almost universally, the most successful investors Tony interviewed were generous. They believed in giving back. And Tony argues this isn't just altruistic, it creates a mindset of abundance that attracts more wealth. Key takeaway: wealth is built on beliefs before strategies. Adopt the beliefs first, then the strategies will make sense. Part 4: Freedom: Creating a Plan. Chapter 12: Your Financial Freedom Plan. Now Tony gets practical. He outlines 5 levels of financial freedom. Level 1: Financial security. Your basic needs, housing, food, utilities, transportation, insurance, are covered passively by your investments. You never have to work just to survive. Level 2: Financial vitality. Half your current lifestyle is covered by passive income. You have breathing room. Level 3: Financial independence. Your entire current lifestyle is covered passively. You can stop working tomorrow and your life doesn't change. Level 4: Financial freedom. Your desired lifestyle, including luxuries, is fully covered. You live the life you want, not just the life you can afford. Level 5: Absolute financial freedom. You can do anything, anywhere, anytime for as long as you live. Complete abundance. Tony says most people give up because they're aiming for level 5 and it seems impossible. He says, start with level 1, make it real, then climb. Break the goal into steps, and it becomes achievable. Key takeaway: financial freedom is not a single destination, it's a ladder. Start at the first rung and keep climbing. Chapter 13: The Secret to a Stress-Free Retirement. Tony addresses one of the biggest fears Americans have: running out of money in retirement. He introduces a simple rule: the 4% rule. If you can live on 4% of your total investment portfolio each year, your portfolio will likely last 30-plus years, even accounting for market downturns. So, if you need $40,000 per year, you need $1 million invested. If you need $80,000 per year, you need $2 million. This gives you a concrete target to aim for. He also discusses the importance of automating your savings and investments. Pay yourself first, set up automatic contributions to your retirement accounts before you see the money. Remove the willpower requirement entirely. And finally, Tony discusses health as wealth. What's the point of $10 million in the bank if you're too sick to enjoy it? Invest in your health, sleep, nutrition, exercise, relationships with the same discipline you invest in your financial portfolio. Key takeaway: know your number, automate your savings, and invest in your health with the same rigor as your wealth. The unshakable mindset. We've covered a lot today, from understanding market cycles and corrections, to the power of index funds and tax efficiency, to the all-seasons portfolio, to the psychology of wealth and the importance of purpose. But I want to tell you one thing that Tony Robbins wants you to take away. You can persevere, not because the world will stop being volatile, not because the markets will never crash, not because life will always go your way, but because you're built differently. You'll have knowledge, you'll have strategy, you'll have mindset, you'll have emotional control. When everyone else panics, you'll see opportunity. When the market crashes, you'll smile and buy more. When people say, "This time it's different," you'll remember that never happens. Tony says, the secret to living is giving. And the secret to financial freedom? It's not a stock tip. It's not a magic formula. It's discipline. It's consistency. It's patience. And a firm belief that you deserve to be free. Start today, not tomorrow, today. Automate one investment. Open a Roth IRA. Read another chapter. Take another step. Because the journey to financial freedom doesn't begin when the circumstances are perfect. It starts right now. Thanks for watching. If this summary helped you, like this video, subscribe to the channel, and share this video with someone who needs it. And remember, your best investment will be in yourself. Stay strong. Thank you.